guys, Tatum Praise here, top producing real estate agent and investor here in Tampa Bay. And today I'm gonna make sure that when you go into your first flip project, that you ensure to account for a lot of the major fees that most first-time investors tend to overlook. So tune in and let's check it out. All right, so starting first with what I classify as soft costs. Now these are gonna be your costs associated when you go to purchase the property and when you go to sell the property. Now, for the purposes of this video, I'll break it down into two separate. We'll deal one with a straight cash transaction, so that's you purchasing the property outright with your cash. And another situation, we'll look at a hard money lender, because obviously a lot of first-time investors may go this route because they don't have the full load of cash up front to buy the property outright. So they're gonna use leverage to buy it with a hard money lender. So we'll go through two separate situations to give you guys a full picture of things. So we'll start out, number one, with a cash transaction on the buying side. So starting first with cash, because ultimately this is the simpler version and I'm more excited to talk about when there's a lender involved and hard money involved, because that's really where a lot of the fees come into play and things can really add up. But first, focusing on cash. It's really gonna depend on the title company that you use, but a good rough ballpark estimate, your closing costs are going to tend to be around $800 to $1,500, give or take. Now, what's included in that? Really, it's just your closing costs. So it's gonna be things such as the title fees associated with the title company, the recording fees, and the transfer fees with the county in order to record the sale. And if there is any HOA or anything, that would also be included if there are any transfer fees. And last but not least, you do not have to have insurance on the property if you pay for it straight cash. So I would advise you probably get some sort of policy, and that's not included in this range of $800 to $1,500. So that would be on top of that. But a good rough ballpark estimate is gonna be $800 to $1,500 for your soft costs if purchasing the property outright cash. So now getting into the fun stuff, when a lender is involved. This is really where things start to add up. So I've got a whiteboard out and we're gonna really dive into things and get the full breakdown of the whole shebang bang. So let's go. Like I just said, this is your closing costs when purchasing it straight cash, which is also going to carry over because you still have to pay for the title fees, the recording fees, filing fees, all of that. So that's gonna carry all the way over and we'll include it in our fee breakdown here. So our main category we're gonna be focusing on is the hard money section. Now, remember, our purchase price on this property is $200,000. Now, in this case, we're going to say that the lender is requiring you to put 20% down on the loan. So your loan amount is going to be $160,000 after your 20%. So looking here, a typical lender with a newbie is going to charge at least 2 to 3 points up front. Now, what are points? Points are a percentage. So it's going to be a percentage of your loan amount. So 2 to 3 points is going to be 2 to 3% of $160,000 that you will pay upon closing for the hard money loan. In this case, we'll say it's 3% because you're a newbie and you have no idea what you're doing. So the lender is going to charge you higher points. So based on 3% of $160,000, the lender is going to charge you $4,800 in points up front. Now, I'm also going to couple, because we're trying to get an idea before securing a deal or moving forward with a deal, of really our all-in numbers and what we can expect to make on the project. So I'm going to include our interest that we'll be paying throughout the duration of the project included in this right now to kind of put everything into perspective here. So typical interest rates with a hard money loan are going to be 10 to 12%. Because you're new, we're going to base it off of 12%, because typically a lender is going to charge you higher interest if you don't know what you're doing. So we'll say it's a good situation, it's going to take you 4 months to knock out this project. If it happens, something goes wrong, shit hits the fan, all of that, it takes you 6 to 8 months. Things really tend to add up then. So we're gonna base it, good situation, you knock it out 4 months, good to go. That's going to be $6,400 at 12% interest. So how do you calculate that? You take $160,000 times 12%, and then you divide that by 12 months, and it comes out to $1,600 a month. And then you multiply that by 4 months. That's the time it's gonna take us from the time we purchase the property to the time that we close on the property. So that's gonna equal $6,400. And then because you're getting a hard money loan, this lender is going to want you to have an insurance policy on the property. In comparison, when you purchased it cash, you can decide if you want insurance on it. It's your money, you don't have to. I would advise you do. But in this situation with the lender, they're going to want you to have an insurance policy on it. So we will classify it. Insurance is going to cost you $1,200. So adding these all together, your closing costs, that's associated with the title company, recording fees, transfer fees, all of that good stuff. 3 points up front on a $160,000 loan amount is going to be $4,800. 12% interest over 4 months is going to be $6,400, and your insurance is going to cost $1,200. Adding that all up gives you $13,200. So that's your soft costs upon closing and 4 months of interest. So that's just to purchase the property and your loan. So not including any renovation or anything. And now we're gonna jump into when you go to sell the property, what you can expect in fees to pay on that aspect of things as well. That way we can take your ARV, we can subtract out what you're gonna pay in closing costs on the sell side, and then we'll back out of it to get basically what you're going to make in profit. Boom, boom. All right, now changing gears to when you go to sell the property and taking into account all of the costs that you will have associated when selling the property. Closing costs when selling a property is going to be roughly 2% for closing costs, and then you're also going to have real estate commissions. If you are not licensed, you'll pay at least 5 to 6% in real estate commissions as a standard. So that's going to total 8% total in closing costs or fees associated when you go to sell the property. Now, in this case, our ARV is after renovation value, what we expect the property to sell for, and how we came up with this. We ran comps based on similar comparable properties that have been updated, renovated, and we came to a consensus that we believe this property is going to sell at $360,000. So let's say we've got a contract on the property at $360,000, and we'll base everything off of that. So taking into account 2% in closing costs and 6% in real estate commissions, it's going to equal a total of 8% at $360,000, which comes to $28,800 in closing fees. So taking your ARV of $360,000, subtracting your closing fees of $28,800, that's going to give us a net of $331,200. Now, moving forward, that is what we had paid upon purchasing the property. So we bought the property at $200,000. Our soft costs and interest associated throughout the term that we held it came to $13,200. Taking that into account, you take $200,000, what we bought the property at, our soft costs plus our interest on holding the property, plus the renovations that it took to get the property up to where we needed it to be, it came out to $75,000, we'll say. So you spent $75,000 on the renovation. So you take $200 plus your soft costs and interest, plus your $75,000 in renovations. That's going to give us a number all in at $288,200. So all in the project, we're in it, our purchase price plus our soft costs and interest, plus our renovation cost of $75,000 brings us to $288,200. So now taking that, after we subtract our closing costs upon selling, our $360,000 sale price, subtract our closing costs when going to sell, which is our closing costs and commissions that we pay a real estate agent like myself, and that brings us to $331,200. So you take that number right here, which is what we're netting, and you subtract what you are all in the deal at. So you're all in at $288,200. That's going to give us a net profit of $43,000. So guys, I hope that helps. It's a very simple kind of breakdown of how you can run through numbers if you kind of understand the full aspect of things when there's a lender involved, and you kind of start to memorize what you're going to expect to pay in loan fees, in holding costs, and closing costs when you go to sell the property. I hope that's helpful. If you guys have any questions or you're interested in buying in the Tampa Bay area, please hit me up. I'd love to help you out. Other than that, Tatum Praise checking out. I'll see you guys on the next video.